Hello everyone! Let's get right into what happened in the markets today, Tuesday, March 10th, 2026. Because, wow, what a strange and contradictory day it was. You look at the final numbers and it's a real head-scratcher. But trust me, there are some massive forces at work under the surface, and they're reshaping the entire landscape. So let's dig in and figure out what's really going on.
So here's the game plan for this breakdown. First, we're going to tackle this whole US versus Europe puzzle. Then, we'll get into the weeds on the US tariff situation and explain exactly why Europe had such a great day. We'll also talk about the one theme that's driving absolutely everything. Yep, AI. And then we'll look ahead with some data-driven forecasts and even break down a sample strategy to make sense of it all.
All right, first up, a tale of two markets. Seriously, what happened today was a classic split decision between two of the biggest players on the global stage.
I mean, just look at these numbers. It's night and day, right? The US markets basically went nowhere, kind of sleepy, even a little bit down. But then you look across the pond to Europe, and it's a completely different story. It's just a sea of green. Germany's DAX was on a tear, up almost 2.5%. So what on earth is going on here? How can two major markets move in completely opposite directions on the very same day?
Okay, to figure this out, let's start with the US side of the equation, because something big happened today, a real policy shockwave that hit the markets right as things were getting going.
Now, you see these closing numbers for the US. The Dow down a little, NASDAQ basically flat, and you might just shrug and say, a boring day. But that's where you'd be wrong. What's so fascinating is what these little numbers are hiding. See, there was a huge piece of good news today, something that should have sent all global markets flying higher. The fact that the US didn't, well, that tells you something powerful was dragging it down from the inside, completely canceling out all that good news. And here it is. It all started with the Supreme Court. They made a ruling that essentially pulled the rug out from under the legal framework for some key reciprocal tariffs. So what did the administration do? They immediately pivoted, dusting off this old tool from the 1974 Trade Act called Section 122. Now here's the part that really matters. This move instantly threw us into a 120-day black box of trade uncertainty. And if there's one thing the market absolutely hates, it's uncertainty. It's like slamming the brakes on a car that was just about to accelerate.
And we can actually see this tension in the data. There are these complex financial models, like one called GARCH, that let us measure market volatility. And what they're telling us is that, yeah, the market kind of digested the initial tariff news, but the underlying anxiety, that deep-seated, long-term volatility, it's still really, really high. A lot of that is thanks to the geopolitical stuff that's been simmering for a while.
And here's the thing. All this uncertainty is hitting a market that was already walking on a tightrope. Just look at the S&P 500's valuation. Its forward PE ratio is up at 21.5. The average over the last 10 years? More like 18.8. So what does that mean? It means stocks are already kind of pricey. They're stretched. That makes the market super sensitive. Like any little piece of bad news could really knock it off balance.
Okay, so that's the story in the US, tangled up in tariffs and uncertainty. But now let's flip over to Europe where, man, it was the exact opposite. They weren't feeling bogged down at all. They were riding a massive wave of pure relief.
And this is why. This was the rocket fuel, a single comment from President Trump, just hinting that the conflict in Iran could be ending soon. And the market's reaction? It was instant. It was huge. Brent crude oil just fell off a cliff, down 15%. All of that war risk that was baked into the price? Poof, gone, just like that.
This is a perfect real-world example of what the famous investor George Soros called reflexivity. It's this idea that our beliefs about reality can actually change reality. Think about it. The idea that peace was coming caused oil to drop. That drop in oil prices is great news for businesses, right? So investors get excited and start buying stocks. The stocks go up, which makes everyone even more confident that good times are ahead. It's a classic positive feedback loop, and it can be incredibly powerful.
And you can see the proof right here in the pudding. I mean, who benefits most from cheaper oil? Airlines, of course. And look at them go. Lufthansa absolutely shot up, almost 8%. But it wasn't just them. Think about all the big industrial companies that use a ton of energy. They had a fantastic day too. This is exactly what a relief rally looks like.
Okay, so we have these two big stories for the day. Tariffs here, peace hopes there. But beneath all of that daily noise, there is a much, much bigger wave moving through the global economy. A truly powerful force that's shaping literally every market out there.
And the proof is right here. Remember how the broader US market was basically flat? Well, not everything was. The Philadelphia Semiconductor Index, that's our best look at the chip sector, was actually up today. Why? It's all about the unstoppable, relentless investment pouring into AI. The numbers are just mind-boggling. I mean, NVIDIA is talking about revenue over $215 billion, and the demand for data centers up a crazy 66%. This isn't a ripple, it's a tsunami.
This has actually sparked a pretty cool new idea in economics, this concept of semiconductors as digital gold. Think about it. With a lot of normal assets, you're worried about inflation eating away at their value. But chips? They do the opposite. By powering AI, they make everything more efficient and productive, which is a deflationary force. That makes them this really unique and super valuable asset to own right now.
And make no mistake, this is a global phenomenon. Just look at what happened in Asia. South Korea's Kospi index exploded, up over 5%. Why? Because chip giants like Samsung and SK Hynix had absolutely monster days. Same story over in Hong Kong, where you saw a flood of foreign money rushing back into their big tech and semiconductor companies. The AI engine is just firing on all cylinders, everywhere.
Okay, so that's the why of what happened today. We've broken it all down. So now for the big question. What happens next? Let's switch gears and look at where the data suggests we're heading.
All right, so our model is crunching the numbers and basically sees three possible roads ahead for March. The most likely path, with a 65% chance, is that this good feeling from the geopolitical news continues and pushes the whole market higher. Cheaper energy is just too good for the economy to ignore. Then there's a 25% chance that the tariff drama in the US wins out and we just kind of go sideways for a while. And finally, there's a 10% wild card, an outside shot that AI investment just goes into overdrive. So when you add it all up, the path of least resistance, for now anyway, seems to be up.
So what does up actually look like? Let's put some hard numbers on it. Based on where things stand right now, our models are pointing to these targets by the end of March. For the S&P 500, we're looking at a target of 6,920, and for the DAX in Germany, we could see it break through that big 25,000 level. It looks like there's room to run pretty much everywhere.
But I really want you to look at this one, the KOSP in Korea. The target here is 5,880. That just goes to show you the kind of explosive potential we're seeing in the markets that are right at the heart of this AI revolution. All right, last section. Let's try to tie all of this analysis together into a practical framework. Now, I have to be super clear here. This is purely an educational example. I'm just showing you how a strategist might think about this. This is absolutely not investment advice. So based on everything we've talked about, a quant strategy might have a few parts. You could do a relative value trade, basically betting that semiconductors will do better than crude oil. For your U.S. stocks, you'd want to play defense, focusing on sectors that don't care about tariffs, like utilities, while also grabbing some of that upside in European industrial stocks. You'd probably want to keep a chunk, say 15% in gold, just as a hedge and insurance policy. And then you could make a more targeted bet, maybe using futures, to ride that specific wave we expect in Korea's Kospi 200. So if there's one big thing to take away from today, it's this. The whole story of the market has changed. We're not just reacting to war headlines anymore. We're now in a totally new phase. It's this messy, complex mix of U.S. trade policy getting sorted out, all happening on top of the massive, undeniable growth engine that is artificial intelligence. And that brings us to what everyone is waiting for. All eyes are now locked on NVIDIA's big GTC conference next week. It's the new center of the universe for the market. And the one question everyone is asking is, are they going to announce something that lights the fuse for the next huge leg up in this AI supercycle? We're all about to find out. Thanks for tuning in.